Finally, the world is waking up to the fact that Ethereum might not be the end all be all. Now, of course, I don't have anything specifically against Ethereum except for the fact that it's too expensive, it's not scalable enough, and I feel like it's blindsided a lot of people, and the cryptocurrency space is being stalled a lot. But I don't want to get into that. So DYDX, one of the biggest perpetual futures trading contracts platforms out there, has made the risky move of moving to a new development software, which is the Cosmos Software Development Kit. Why? They're looking for scalability, they're looking for decentralization, and they're looking for fast finality and transactions throughput. So guys, stay tuned for this whole video if this kind of thing excites you, and don't forget to hit that like and subscribe button. So guys, this is extremely important because moving from a platform, I've seen many cryptocurrencies do this, moving from one platform to another is extremely risky because you risk losing most of your users, you risk losing liquidity, you risk losing that thing that humans are comfortable with. Hey, I'm used to waking up and using this, clicking here, doing this. Why are you making me move to a new infrastructure? But this is a tough move, but I think it will be worth it. We've seen platforms that I like talking about here that I've talked about some of the difficulties they've found just by the limitations of being on the Ethereum network. It's still kind of centralized in a way because you have to wait for the core developers to develop infrastructure on the Ethereum network that's going to fulfill what you need to do. Guys, that's too linear, that's too bureaucratic to actually move forward if you look at the way how fast crypto moves. So what you're seeing on the screen, I know you've just been staring at this price right here. This is DYDX, not the exchange, but rather their token, because most of the people are here in the cryptocurrency space because of the financial aspect of it. It adds that extra excitement as crypto builds other products. Now, this is the current value of the DYDX token. I've zoomed into the current minute, the current second, if you view the graph on CoinMarketCap, and of course you've seen a tiny little blimp in the overall graph of the price. If you sketch out the whole thing, it's a bear market, everything has been going down, but this is the current price and the market has reacted positively towards this communication. Look at the price of Cosmos, guys. The market is slowly realizing that the Cosmos ecosystem is not a joke. It's not a joke. Again, as I repeat, we've seen a price pump in the token of the Cosmos ecosystem, Atom, which is the biggest Cosmos hub that uses the Cosmos Software Development Kit that's on the Cosmos network. Now, if you zoom in on the whole chart, basically it's a small blimp because, as I say, price is a distraction, but we've seen the market react to this little news. You can see if you zoom in right here, you can see a little pump in the Atom token in reaction to this news, which means there's a positive feedback from this kind of news or risk taking, as the users of DYDX, they know the problems that come with using the Ethereum network, like gas fees, and the network is not very, very fast, and sometimes you pay the gas fees and your transaction doesn't go through. Now, of course, the page of DYDX takes you to their trading platform, which is Start Trading. We're continuously launching new perpetual contracts. Those that do not know about perpetual contracts, these are futures contracts where you trade on the future price of commodities. But in the case of perpetual contracts, you can hold them forever. With futures contract, you trade, you say, let me buy Bitcoin worth $1,000 today, or rather you put that as your collateral by saying in December, I want to be able to purchase Bitcoin for a certain price. So maybe you've purchased Bitcoin worth $1,000, but that represents a 10x. So you're saying the future price of Bitcoin in December will be 10 times the price, which represents $10,000. So if the Bitcoin price in December, say, is $6,000, you still get that $10,000. So you're trading the cash equivalent, but not the actual Bitcoin. And that's why in this platform you'll be dealing mostly with synthetic assets, you'll be dealing with collateralized assets. And when you look through the documents, you will see that people are asking questions, will you support multi-collateral, so more than one collateral? And they give answers as such as, well, we're using stable coins, so this will be this and that, this will be the play. Of course, they understand these statistics much better. But if you look at the homepage, it spans all the way to Polygon, Solana, Monero, Bitcoin Cash. So you can see how wide they're spread out. They're providing synthetic assets or these perpetual contracts for a lot of high quality assets in the digital currency space. So guys, these guys making the move to other ecosystems. I've seen blockchains, games, or other kinds of ecosystems, maybe they're focusing on something else, detach themselves from a particular blockchain, especially in the EOS time. A lot of blockchains detached themselves from EOS and they failed. But we've seen slowly by slowly certain blockchains that started out on the Ethereum network, like the Binance Smart Chain. The Binance token, it started off as an ERC20 token on Ethereum. It decoupled itself and it got tremendous amount of success, and it's running on the Cosmos ecosystem. We saw the Luna token. It crashed, unfortunately, but it gained a tremendous amount of success. It crashed because of internal mismanagement of what was going on. So they themselves did it. At least as far as the news that we have, they were a major part to the crash of their ecosystem. But a well-managed ecosystem, we've seen that the Cosmos ecosystem has thrived, and they're implementing things like the IBC. Now, of course, there's a write-up, guys. Of course, you have to read these things to understand, especially if you're excited about these kinds of things. You have to understand where these things are. So I'll give a small summary of their actual article. So version 4 of DYDX chain. Now, DYDX version 4 or the DYDX chain, they stated their reasons as to why they moved. DYDX version 4 will be developed as a standalone blockchain based on the Cosmos software development kit. The DYDX version 4 will feature a fully decentralized off-chain order book and matching engine capable of scaling to orders of magnitude more throughput than any other blockchain can support. Now, this standalone chain, guys, you have to remember it's going to be on the Cosmos ecosystem. So DYDX appears to be the most natural fit for use as the layer 1 token of the DYDX version 4. So meaning they want to move off, decouple themselves from Ethereum and actually create their own standalone chain and token that will manage the gas fees and everything. Remember, in Cosmos, you don't depend on one token. So DYDX appears to be the most natural fit for the use as a layer 1 token. That's why they're talking like that. So we're excited to announce that DYDX version 4 will be developed as a standalone blockchain based on Tendermint consensus and built using the Cosmos software development kit. So DYDX version 4 marks the full decentralization of the DYDX protocol, and we're excited about the unique combination of decentralization, scalability, customizability that Cosmos offers. So they're talking about the dynamic nature of the Cosmos ecosystem. You don't have to wait for someone to build something in order for you to progress. You can actually build your own standards. You can build what fits your narrative or whatever your market fit. It is a perfect place according to many of these companies that are trying to do this. Of course, at the end of this article, they say they are willing and they're still open-minded. Remember, these guys were building a layer 2. They were using a layer 2 solution, which is Stackware. Stackware is layer 2. But then they came out in their tweet to say that, hey, guys, these layer 2 solutions are extremely centralized and they're acting as a barrier. We can't really progress. We can't really move forward. And so we're moving to a more dynamic ecosystem, which will give us more leeway to do what we want. So why a standalone ecosystem? At DYDX, we embrace radical changes in technology that have the potential to dramatically improve the protocol. After exploring the landscape of current and upcoming blockchain technologies, we decided that Cosmos would allow us to build the best fully decentralized protocol. The main requirement for the version 4 protocol is full decentralization. The decentralization of a system is equal to the decentralization of its least decentralized components. So this means that every part of version 4 needs to be decentralized while also remaining performant. So decentralization, or the lack thereof in the previous ecosystem, is what they're looking for as they're moving into this other ecosystem. So off-chain decentralization order books, they go into some of that stuff. Guys, if you go into the Cosmos ecosystem, the fees are extremely low, and later that's why you see they talk about no trading gas fees. As mentioned, a major benefit of Cosmos is that the main chain or the chain can be developed to suit the exact needs of the DYDX network. It's flexible. One application of this is that the traders would not pay gas fees to trade, but rather pay fees based on trades executed similar to DYDX version 3 and centralized exchanges. So these fees would accrue to validators and their stakers. Guys, we've seen in the past some of the biggest decentralized exchanges like Uniswap, they've traded like in the last 24 hours maybe like $1 billion or close to that in volume. And then we've seen DYDX trade about 600 to 800 million, maybe 600 million. And in comparison, Binance has traded about $11 billion in the last 24 hours. Guys, you can go check these statistics. I think they're close to that range. So you can see these guys are trying to say that, hey, if we do not find the infrastructure to help us compete with the centralized exchanges, then we're not going to be able to compete. So that is the reason, guys. So read between the lines, see what the OGs are building, the reputable blockchains. What are they building? Where are they looking? Then you make your decisions in this cryptocurrency space. What are they building? All DYDX version 4 code will be open sourced. Everything will run on permissionless networks, and no service will be run by DYDX Trading Incorporation or Incorporate or whatever the word ends at. So our goal is to build open source code that can power a first class production and trading experience. There are a few major technical components to this. The core node, they explain the Cosmos SDK. They explain the standard framework for building Tendermint blockchain, which is a standard framework. The core needs will be to run consensus off-chain. So that goes into scalability and off-chain order book. So they don't need to run the transactions all on the network. So what they're trying to say here is that innately, as they're doing everything that they're doing, it's somehow naturally implementing scalability within it. Guys, this is extremely interesting for those people that truly looking forward to the scalability and the development of crypto. If you're here for the tech, this should be extremely exciting. So thinking 10x bigger. So one of DYDX core values is to think 10x bigger. DYDX should focus on what it could achieve rather than protecting what has been built so far. That is extremely important, guys. That statement, it's more than what meets the eye. So our goal is to see DYDX eventually become one of the largest exchanges in all of crypto. We realize this is an extremely difficult and ambitious goal, but believe DYDX should make choices to maximize the chances of achieving the goal. Guys, this seems like a pitch and so on, but they are talking to the fact of why they moved to this. And you can read all these, get a bit more icing on your cake, try to understand this better. But what has been said has already been said, because they're making a risky move. You can lose a lot of liquidity, users, and so on, but they know the importance of doing this. Yes, bridging assets across blockchains has proved to be challenging. Most existing bridges suffer issues with user experience and or security. One benefit of DYDX focusing on synthetic trading is that only one collateral asset, e.g. a stablecoin, must exist to enable synthetic trading of any asset. The top priorities are to support the best experience for transfers from and to centralized exchanges, transfers from and to Ethereum, transfers from and to other chains, rollups. But guys, they're looking at this way. We're able to build basically we need to build a robust stablecoin, right? And this stablecoin is going to act as the major thing to handle this whole collateralization thing. And if we have this stablecoin, then we can easily use it across all the Cosmos implementations of that interchain interoperability standard and communication. And this will easily expand what they're trying to do, and it will easily allow them to tap into other things, other ecosystems, essentially. So they don't have to think about a lot of problems that come with just being on the Ethereum network. And of course, they have the conclusion: developing our own Cosmos-based chain just happened to be the best fit based on the unique product trade-offs for DYDX and the mission to build the best professional trading product experience. So while we are thrilled for DYDX to be a leader in the Cosmos ecosystem, we continue to be excited about what could be possible in the future with other chains or layer 2s. We will continue to keep an open mind about always building on the best technology for us at each given time. So guys, you have to understand, first of all, I'm not invested in this DYDX, but I've used them in the past, probably 3 years ago. And the point I'm trying to make here is pay attention to Cosmos, the ecosystem, pay attention to the fundamentals like decentralization and scalability, and also pay attention to the fact that if a big company decides to make such a fundamental move, there's a big reason as to why they're doing it and why they're picking the particular players that they're choosing to play with. Or rather, to be serious with, if I should restate that. Alright guys, I hope you learned something in this video, and I'll see you on the next one. Take care. Bye bye.